Okay, everybody, this is the final segment of the day. Thanks for being here. Glad you guys stuck around. First, before I introduce the panel, I just want to give a shout out to my team at Trade Ideas, Marissa and Scott and Rudy, doing all the hard work behind the scenes, making this thing happen. Great job, guys. Really good. Of course, our sponsors, Small Exchange, Benzinga, Trade App, E-Options. Who did I forget? Where's Donnie? I know, Sprint Trade. I just was trying to pull Donnie's leg. So without you guys, this wouldn't have happened. So thanks to them. So this is my favorite part of the session because it's the end of the day. I can take my shoes off, get a little comfortable. Excuse me, guys. Sorry for the people sitting up front. I'm taking my shoes off. All right. This is what we're going to talk about. This is top of my mind. Anyone who follows me on Twitter knows that I like to say this all the time. Turn off the goddamn news. Stop trading the news. You're going to get yourself whipsawed. That's my personal philosophy. I haven't watched the news or read a newspaper in a decade, and I don't plan on starting today. As traders, all you guys on this panel right here are active traders. I want to know how you guys stay sane with a lunatic with a Twitter machine jostling the markets every day.
Oh, starting on politics already?
Well, no, it's not a political discussion, but how do you stay sane in a news cycle that is moving markets left and right every day? So we'll start with Anthony at the end. Anthony, tell us how you do that.
I love it. When there was a tariff, all tariff news every single day, and like during the spring, basically, we were going short on Apple all the time. I posted that trade up. I mean, I love it. Like, that's why I just love it. Because the speculation, the speculation of tariff news, I just had to make a short-sided trade. And it was just, I was protected, but that short side definitely, because he's a psychopath. Exactly. I mean, because the Twitter thing's just, he's just crazy. And just based off that little speculation, I'm so nervous. Sorry, guys. This is my first event ever. Oh yeah, so I'm a little nervous. But based off that speculation, really, like we had a decent sized short on Apple, and we ended up hitting it. So I do love it just because of that. But then also, when I'm short Roku at 126, and the thing goes to 170, because other China tariff news, other China tariff tweets, it does screw you. So. Playing it both sides, I just love it because it gives me action. Gives me absolute action, and you could basically, trade the action. I mean, we're technical analysis, right? So,
right on.
I'm so nervous, man.
Okay.
I'd say, in intraday trading, the volatility is amazing. For swing trading, it can be a bit more difficult. But many times, I've converted to also following the dark pool money and the big money. And so then I see that the news comes out after the fact, and we've gotten a glimpse of what's going to happen beforehand.
Right on.
I mean, I think at the end of the day, depending what's being said, really your overall kind of thesis. If you have a thesis that's long Apple, if you think Apple's going to go higher, I mean, if you would have bought the dip after every single drop, I mean, it wouldn't have been a bad plan. I think you've talked about that before on Twitter. I've seen you typing BTFD a lot on there, and. So at the end of the day, I mean, if you'd have bought the dip, back in 2018, the end of December, I mean, you would be sitting pretty right now on everything. So it really just comes down to looking at your overall thesis, not really paying attention to what's going on Twitter every day. Because obviously, like in the morning, there might be a tweet about something, and then at the end of the day, it's different tweets. So it really just comes down to your overall thesis and having the technical analysis or whatever your plan is there. So. Yeah. Not really paying attention so much to what tweets are saying, but more just your overall idea.
Okay.
It'll maybe actually probably give you more opportunities to get long if you're trying to get long, or if you're like you
at
said,
a better
if you're
price.
trying to get, if you're short, it's obviously good for you. But if you're trying to get long, it's not a bad idea to buy the dip.
Right.
Well, I'm a day trader, and most of the stocks that we're trading are news-driven stocks. But usually those news are coming before the market or after the market. We just trade the open. But breaking news during the market open is amazing for us. I love when President tweets and actually moves the market because as short-term traders, we love that volatility. Usually, when anything that hits the market, the SPYs started moving. But a SPY trading a SPY for me as an active trader is not very capital efficient. It's $300, maybe moves $1 or $2. We trade TVIX, which is the short-term volatility of for the market. It's correlated reverse of the SPY. If the SPY drops, TVIX pops up. Or if the SPY shoots up, TVIX drops, we short TVIX. And the way that I trade it is I wait for the first minute and see if the volume keeps coming or not. Because a lot of time the breaking news is people panic, but in the second minute the volume dies up a lot. If in the second minute the volumes keep going, I'll start trading TVIX in the opposite direction of the SPY. And it usually gives a really, really good opportunity. In the last couple of months, we had a couple of really good days, and I actually sent an email with all of the instruction to our community members. And I love that. I mean, as a trader, I'm in Canada, so I have no political bias toward president, but I love following a president, and just every tweet that comes, it's amazing for the market.
Awesome.
Well, first off, I've done a lot of these, and I'm always nervous, so don't feel bad about it at all. I'm older than everybody else on this panel, so I burned out on news back in the 80s and the early 90s, like talk radio, and so I can just naturally tune it out. What I would say is the unpredictability of our commander-in-chief makes me either really short-term or really long-term. I think it's that middle term where you can get in trouble. If you're closing out your positions every night, you don't have any overnight risk, right? Unless he does something intraday. And if you're doing a longer-term trade where you're using like a 100-day moving average or 200-day moving average as your technical point, it's not going to be as big a deal. It's those people that are in that intermediate term. Intermediate term is always more dicey. It just happens to be extra dicey in the last 3 years.
Brian's a drummer, by the way. That's why he holds the microphone right to his mouth.
Sorry.
Okay, so this is probably the last time I'm ever going to host a panel because I've done two bad things. I took my shoes off, number one, and I forgot to introduce everybody. So I'm very, very, very sorry. Again, I'll never do this again. But this is Anthony. Anthony, introduce yourself. Tell everybody what kind of trader you are. Oh, sorry. Yes, doesn't have a microphone. Again, I'm out. 3 strikes, I'm out. See ya.
I am a short-term technical trader. So, what's really funny? The gentleman that just spoke, Brian Shannon, he doesn't know who I am, but it's funny because I saw the quote that's in there. It's like he has like 30, there's like 30 traders and they're all mentored by him. So my mentor was actually mentored by Brian Shannon. So I'm kind of like under that same tree. So when he's talking about VWAP, it's kind of like the same, me and Brian take the same angles on the same, basically the same type of trades. So I'm a short-term trader. I'm from New Jersey. If you guys can't tell, got a V-neck on. We launched a little fund in Princeton in February. I've been training for 4 or 5 years now. I started right out of college. I have a economics degree, and I just got into trading while I was in school, and then basically just launched my own little account right after college, and I had real success, trading the OTC market right out of 2014. I had tremendous success doing that. And I got lucky, not gonna lie. Like I'm one of the lucky ones that didn't blow.
Luck's a part of it.
Yeah, I didn't blow up my account. Everyone else was long in mine, MINE, and SPLF or SPLI. I don't know if you guys remember those stocks, those weed stocks back in the day. But a lot of the guys blew up, and I just kept taking my money because I'm cheap. I'm not gonna buy any of you guys drinks tonight, so because I'm cheap. But
Anthony, what's your Twitter handle? So
my Twitter is alldaya_. Yeah,
all day A.
Basically, I'm just a short-term. I'm starting to get into options now this year, and that's had tremendous success because of Trump. Sorry, but I had tremendous success doing options so far this year. I had some pretty big hits, and I have a wide range. I'm one of the only guys that can trade an OTC penny and all the way up to a large cap. I was trading PayPal on Friday. Tesla on Thursday. We're short Tesla, and then before the rip. Sorry. So that's basically it, guys.
Well, we're glad you're here. Next up is Jane Galena. I'm going to get out of your way. Jane, tell us a little bit about you.
So I'm Jane Galena, also known as Airplane Jane. I was in the aviation industry. I've had my pilot's license for 23 years.
She flew here.
Yeah, no. I didn't. Commercially.
That was a terrible joke.
And I came to day trading after already having a value trading basis from being a little kid. I had my Series 7 19 years ago. I was in the industry as an assistant to 3 different brokers. I saw devastation happen with people that had margin in their accounts, and I thought, I never want to trade anybody else's money. Then things happened. I had my first daughter, and I live in Quebec, and you have to be 100% bilingual to get a job up there. I can get by with my French, but I could not get a job. And I also had a child at home, and I thought, I need to go ahead and provide for my family. So my husband reminded me about some great trades that I had. I thought, yes, I want to do this, but I want to be active. I want to do it every day. I want to have my hand in the market. I don't want to be passive, make a trade once, and then 9 months later, get out. And subsequently, I started off scalping, then doing reversals, then a bit more swing trading, and then a bit more longer term trading. Looking at the risk management and just finding that, when you're doing intraday trading, if you're trading a lot, you've got higher risk, right? And you have bigger moves typically with swing trading. So it's changed throughout the years, looking at that risk management aspect and getting into options as well and limiting that risk overall. So I've definitely moved in my education within the trading world.
Great, thanks. Next in line is Patrick Wieland, superstar, YouTube superstar.
Yeah, no. So basically, I have now titled myself I'm just a stock market personality.
Okay, all right.
Because it's just the easiest way to do it, because that way people are like, oh, are you a day trader, are you a swing trader? I'm just in the stock market. I enjoy the stock market. I've actually had a lot of success with cryptocurrency as well, Bitcoin. Ended up buying a bunch of Bitcoin before the last big bubble, Litecoin, stuff like that. And it was funny because I told a lot of my friends, like, man, this stuff's really interesting. I'm like really doing a lot of research and kind of learning about this stuff. It's really cool. There's a lot of opportunity. And all my friends are like, oh, you're an idiot. It's going to go to zero. And I'm like, okay, cool. And this was like when Bitcoin was like $3,000 or $4,000. Well, then Bitcoin went to 10,000. Everyone's like, hey, Joe, should I buy now? Is this time to buy? And I'm like, no, I told you to buy at 3. And then it went to 20. And I had friends call me like every single day, like, hey, I think I'm going to get in now. And I'm like, I told you to buy at 4. So it's really interesting to see kind of like that herd mentality. Like, especially, I think Bitcoin was a great example of that. Like, every single person was a critic when it was 3,000, but then when it was 15,000, they wanted to buy. Like, everybody was like, I'm buying, I'm getting in there. So it's been really fun. I've got a YouTube channel that I make videos on talking about cryptocurrency, stock market, trading, stuff like that. And yeah, it's just been a really cool journey. It's been the last 3 years of growing that. Like, we just hit 90,000 subscribers on YouTube. It's really just like a fun journey. I've just shared my experience. I started out with Robinhood. It was really funny. I was on the wait list for Robinhood when it like first came out. And I was like, man, this is gonna be so sweet, because I was using E-Trade at the time and I was paying, $7, whatever, commissions. And I thought it would be like the coolest thing to not have commissions and not have to pay for commissions. And I started trading on Robinhood, and I started trading like 3 times ETFs. That was back when I think it was UWT and DWT. That was like when that was like $1, and we'd have like 300, 400% swings in that like ETF some days, and I thought I was like a genius, because someday I'd be like, oh, I made $500, trading. My first trade ever actually was on some biotech that has news, and I bought it at like $3 in the morning, and I sold it for like a $700 profit. First trade ever, and I told everyone, like, this is the easiest thing ever. You just buy it in the morning and you sell it for a profit in the evening, and then it was all downhill from there. But actually, my first ER trade was the best, because I think I bought Fitbit like an hour before it closed, and it went up like 10%. Like, this is when it was like $14, and it went up 10% like into the close. And I was like, well, I can just sell it, after hours when the news comes out. Either way, I'll be fine. I'm up so much. And the news came out and it dropped like 20% instantly. And I was sitting there like, is something broken? I think my broker's broken. And I called E-Trade. I'm like, what happened? Like, I couldn't sell. They're like, that's an ER. And I was like, well, I just learned. So it's been a really cool experience kind of sharing that on YouTube and just, showing people the bad and the good. So
Patrick, where can people find you on Twitter? Is that the best way to find you?
Yeah, Twitter's good. It's just Pat Whelan Live, or on YouTube, it's just my name, Patrick Whelan. So
awesome.
Yeah.
Our next guest is Andrew. I met Andrew for the first time in May. I should have mentioned, Jane hosts an annual conference this summer. She held it in Montreal, which is where she lives. And Andrew and I were both guest speakers at the conference, and I got to see Andrew's presentation, which was phenomenal. So I'm glad you're here.
Yeah, thank you. So it was my pleasure to share the panel with you over there and share the stage.
That's right, yeah.
So my name is Andrew. I'm actually an engineer. I live in Vancouver. I did my PhD in chemical engineering back in 2013. And I started an engineering job as a research scientist in a very good company. But after 7 months coming out of school with a PhD, I got laid off. And that was the moment that hit me really bad, that is this a corporate life? Is something that I want to go? I mean, it could be later in my life with kids and mortgage and a lot of family obligation. I said, okay, screw that. I'm studying trading, and I really had no background. But they were generous with the package that they gave me as a severance package, and I started trading the market. It was tough at that moment. The commissions were high. The tools were not really available. But slowly I started getting it. Slowly, after a lot of mistakes, I get that. And I wrote a book, How to Day Trade for a Living. I self-published it on Amazon, and I just journey my experience on becoming a trader. It was like a PhD. I did a research or something that I didn't know about, and eventually published my result like a dissertation. And the book turned out to be a bestseller, and a lot of people started contacting me because I put my email address in there. And because I had a lot of people coming to me, I said, all right, we start a community. We start a forum. We start answering the questions online and stuff. So we started Bearable Traders back in 2015 and 16 as a community for day trading. Our community focuses only on the mid to high float stocks. We don't trade penny stocks. We don't stocks under $10 or $5. We don't mess around with them because I believe, and our community believes, that they're very difficult to manage the risk, and consistency is very difficult. I'm not saying it's impossible, but it's very difficult to make a living trading those stocks. We don't get a lot of big moves in Tesla or Apple or Facebook, like 1,000% a day, but it's good enough with a reasonable account size, 1 to 2% add into your account. And I don't do swing trading because I don't think swing trading, making a living out of swing trading is easy because you need a big account for that. But a day trader with a reasonable account size can add 1 to 2% a day into their account. Compare that with 20% a year for the best swing traders in Wall Street. So, I mean, day trading, it has this niche to make, a couple of $100, $1,000 a day in your account, for a living.
We're going to dig more into that when we finish up with Brian. So Brian, he has the, we met at a sweat lodge. No, wait, that's someone else. Never mind. Brian was one of the first guys that got really active on StockTwits. When I worked at StockTwits, when we were launching StockTwits, he was one of the first guys that was blogging and really sharing, not only, like
too much.
Too much. Exactly. You were sharing trading stuff, your experiences, but like the human experience of trading, which really connected with me. And Brian is one of the first guys that I got to meet like in person through social media and became friends with. Unfortunately for him, we're friends now. Sorry to out you like that. So why don't you introduce yourself and say a little bit about your background?
So I'm Brian Lund. I am also a stock market personality, just nobody knows it. So I did my first trade 1 month after I turned 18, which was in 1985. So I've been doing this for 34 years.
Wow, you're old.
I know, right? About 2 years after I started trading, I watched the market drop 23% one day, something you guys probably haven't seen yet. I watched the bubble in 1999. I watched the crash in 2000. I watched 9/11. I watched the financial crisis. I've seen every type of market there is out there. I'm still here. And the first time I ever traded, I went into a Sears because they used to have Dean Witter brokerages in Sears. And I walked up to the gentleman behind the desk who was named Randall Woodworth, right? Perfect name for a broker.
Wonderful name.
And I said, I'd like to buy 300 shares of Altos Computers. Now, I wasn't really sure what Altos Computers did. I thought it had to do with computers because that was in their name, but I wasn't sure. I'd seen them on a cable access channel. And he said,
what could go wrong?
He said, call me back in 6 hours, I'll tell you what price you got. So ever since then, I've been an active trader. And one of the unique things is that I've never been an institutional trader. I've always been a retail trader. So when I talk about trading, I'm talking about from the same perspective as probably 99% of you people in the room.
Right, and thanks for saying that, because one thing I wanted to point out about every one of our panelists here, none of these people work on a Wall Street trading desk. They don't manage money, millions of dollars on behalf of customers. They're all traders trading their own account, regular people, like most of us here in the room, right? And Andrew, you said something that brought up a topic that I wanted to discuss. And I've got some...
Yes, Sean, you can find me on Twitter at...
God damn it.
Good friend, Sean. Just Google the Lund Loop. The Lund, my last name, Loop, L-O-O-P. Don't ask, just Google it.
Thanks for reading my mind, Brian. Brian Lund, everybody. Okay, you can leave now. Okay. All right, so one of the things that kind of rankles my feathers a little bit, you see this a lot on social media. You have a lot of people out there who are trying to sell the promise that anyone can day trade for a living, exclusively as a day trader. Well, I hope I'm not outing anybody here, but every one of us on this panel, myself included, we all are traders, but we do other things. We have side hustles, we have jobs, we have other things. I think, and this is my point of view, I think having other streams of income is so important for a trader. And I can speak for myself, it's absolutely the most important thing for me. Do you have any feelings about that? Do you trade differently when you're only trading for your income versus?
Yeah, I mean, when I first started trading at 18, I mean, obviously I had another job. I was a bellboy, right? And I always had another job. I had my own business. I sold it in 2005 to trade full-time, just trade my book. I had no trading service. I didn't run money for anybody. The only way I paid bills was by making money at the end of the month. And it was the most nerve-wracking 5 years of my life. As you can imagine, it was right there in the middle of the financial crisis. 2010, I got approached by a group that wanted to create a new social broker-dealer, and I took the opportunity to take that job. And ever since then, I've had a full-time job, and I 100%, for me personally, I trade better. Something about my psyche changes when I know I have a steady stream of income. And I think a lot of people misrepresent, nobody here, but I think people in the media misrepresent what trading's about. I don't think for most people it's about making $1 million and retiring. I think what it is it's supplementing what you already do, right? So if you make 5, 10, 20% of what your salary is every year in trading on the side, that's a significant amount of money, right? And you have the opportunity to take it up as much as you want. But the idea that people are going to, trade for a living and sustain themselves, I found very few people that can do that over the long run. There are Brian Shannons in the world, but they're few and far between, at least in my experience.
Right. Anyone else have any strong opinions on that? We'll pass the mic down.
Well, I don't think day trading is for everyone. It's a very, very difficult career. And I definitely, mostly I discourage people from day trading than encourage them to day trade because it requires a certain skill set that, it's like a professional athlete. Your performance matters daily. You have to be ready every day. You have to make decisions really fast and quick. So that's something that I always tell people that try it a little bit with the simulation and with a small amount of money. If you like it, then fund your account and go bigger and more aggressive. So it's very important because it seems easy when you look at the charts, but it's actually decision making really fast. But to your point, yes, I had a job until this year. I mean, I was a trader at the open, and Pacific time zone is perfect for day trading because the market opens at 6:30. You can start at 6 o'clock with the pre-market analysis, and it can be done really by 7:38, depending on the style of trading that you have. For me, my trades are seconds to minutes, and I'm done usually at 7:30 in the morning, which is 10:30, and I can be at my work at 8:30 or 9. And I had a job for years. And the main reason that I had the job was because I needed to get a mortgage, and the bank needed employment. And I was showing them the money and said, no, we don't give you any mortgage. So I needed to keep that job. But at the same time, day trading can be boring. You're sitting behind your computer, you're alone, isolated. Having a career, getting a satisfaction from outside society, I think helps a lot. And I encourage people to keep the job as much as possible. It's very easy on the West Coast because of the time difference. Yeah. It's much difficult on the East Coast. But we have a lot of traders on the East Coast. Those are the people who have flexible hours, or they're self-employed, or they're consultant, that they can actually accommodate that time frame. Yeah. And if you trade the stock market, unfortunately, you're bound by that time of the day from 9:30 to 10:30, 11, when the volatility is there. Other markets are open, like futures, and you can trade them in different hours. But that certain time is very, very important. So you should be available at least half an hour before the market open until at least 1 hour after the market opens.
Yeah, I've always been jealous of West Coast traders. I think they have that advantage, especially when you're new and you're trying to learn. It's great you can still keep your 9-to-5 job and trade the open.
I wouldn't be a trader if I were not in Vancouver in the West Coast time.
Yeah,
100%.
Right on. Meanwhile, Patrick lives on the East Coast. You couldn't do that.
Yeah, I would say that living on the East Coast is probably the worst for time, at least for me, because I like to actually go outside and do things, and I have a boat and go fishing, and it's like the worst, because I gotta wait till 9:30 to trade, and then I gotta sit there till 12 or 1, and it just kind of kills your whole day. So if you want to do other things, you kind of, I would love to live in Hawaii, so I could wake up at 3 in the morning, trade, and then have the rest of the day to do whatever I wanted to do. For me personally, the cool thing about cryptocurrencies, I've been able to trade at night and stuff like that, but with the overall market opening at 9:30, it's, yeah, I mean, I wake up at 7 and I'm sitting there for like 2.5 hours. I'm like, I don't want to trade pre-market. I'm going to trade pre-market, and then I trade and then I lose money, and I'm like, all right, I'm going to walk away now. But yeah, I think I actually just bought a new Lamborghini with all my profits from last month of trading. But I think at the end of the day, a lot of people put out
Did you
this
drive it in?
perception. Yeah, people put this perception out that, you know, trading's super easy. A lot of people think that you can just quit your job tomorrow and start trading. Day trading is the only, I would say, the only profession in the world where you can basically put money into an account and trade against the best traders in the, you know, world. Where like if you wanted to be a professional golfer, you couldn't just go play in the PGA. You couldn't just go play, you know, World Series of Poker tomorrow. Like day trading is the one thing that anybody can play, but you know, you're not going to be in the same level, and that's the hard thing to understand. Is people think they're going to put money in an account and start trading tomorrow because they read a book. You know, no offense to your book, but it takes a lot of just time and effort and being realistic. So that's really what it comes down to.
Right on.
Yeah, I agree with Andrew in that not everybody is cut out for trading. You do have to have discipline, and you have to be able to manage your emotions, because trading is 90% emotions. If you have that skill set where you can study those rules, you understand. I was talking to Andrew, who's newer to trading, and it's all about, it seems easy in the beginning, but then you get into it and you have that psychological aspect of it. And that's why I think having something else on the side, especially for me, I love to do things. I'm not someone that sits still. So having something else to entertain my mind as well is great. But being able
Jane,
to...
you don't need any more things to do. You got 2 kids at home.
No, but I don't sit still. I sleep very little. And being able to do something else psychologically can take that stress off. And then they're able to concentrate just on the setup instead of thinking, I need profits. Because what's number one, you want to look at your risk management and going in, not the profits. If you're sitting there thinking, hey, this is my only source of income, then you're going to start worrying about the profits first instead of your risk management.
Right on, right
on. So basically, how many people here are from New Jersey? We got tri-state. All right. So one thing when we're from New Jersey, we could just, we tell it how it is. We're real. So basically, I'm gonna give you guys a real life lesson. When it comes to trading, there's a lot of bullshit out there. A ton of bullshit, right? It's the truth. There's a ton of bullshit. There's a lot of, I turned $100 into $1.2 million in 9 months. All right? Can we all agree? Yeah? There's a lot of that bullshit. But basically, you can trade if you put in the work. If you put in the work, you'll be able to trade. It's not going to come in 2 months, right? So if there's any newbies here, you're not going to make $1 million. I've got my intern that's 19 years old here. He thinks he's going to make $1 million in 1 month. You're not. You're not going to make $1 million in 5 years. But you know what I mean? There's just a lot of BS out there. Sorry, I don't want to mention YouTube, but on YouTube, there's a lot of BS on YouTube.
Patrick doesn't own YouTube. It's okay. If he did, he wouldn't be sitting here.
Yeah, just basically what I'm getting at is you can if you put in the work. It's not going to take 2 months, not going to take 3 months. It's going to take a year. It's going to take years of process and learning, and you got to just cut out all the bullshit. You got to cut out all the Lamborghinis. You got to cut out the houses and all that nonsense, because you're not gonna, if you follow that, you're gonna be obsessed with profits and losses instead of learning. You're just gonna. So I'm a moderator at Mad as Money, and I'm always talking to the 45-year-old guy that is trying to follow my trades. I'm like, you can't follow my trades. You're not me. You don't have this in your head. You have to learn and process the information. And you're not gonna have the same mindset as me right now. You didn't put in the 5-6 years of work from 6 a.m. to 2 a.m. every single day just to learn charts. Reading books, reading everything, looking up videos and DVDs and all this stuff, collect all the information together. You're not gonna put all that together in 2 months and make $1 million the next week. You're not. So basically, there's a lot of bullshit. You just gotta follow the plan. Relax and let it ride. There you go.
All right, let's get real here for a sec.
Let's get real.
Who wants to talk about a bad beat? A really bad beat where you messed it up bad. Does anyone have a trade you want to talk about?
I got Roku, August 26th. I went short at 126, and we took 500 puts for September. It was September 120 or September 90 puts. Or September 20th, 90 puts, something like that. And we went heavy,
Which, by the way, for those who don't know, if he's long puts, it means he's bearish. It's a bearish
Yeah.
position. Just for make sure everyone knows.
Sorry to not clarify that. I'm thinking everyone knows. But we hit it. You know, it was a Friday, and you know we were up like $3,000 at first, and we were so happy. We're like, yeah, cool, we're gonna nail this. Like, because Oroku at that time, I was like, this is bullshit. It's 126. You know, fundamentals, technicals, it just didn't make sense at that time, and we got caught in a squeeze, and you know, went to 170, got burnt, lost around like 50 grand, and yeah, and I have a big, just a disclaimer, I have a huge account. I have a partner, you know, we have a little thing together, and you know, we're gonna try to launch it even bigger and bigger and bigger. So we have size. So, you know, so we got burnt for 50K, and then we reshorted, and we actually made our money back. This is the funniest story though. We reshorted, you know, we got more puts for 130s because you know it was up, and we got our money back. You know, we made our money back we made like $8,000 back on it, and then if we just waited 2 more days, it went to $100. We would have made $2 million.
So what's the lesson here? Why did you get out of that trade when it was working?
Well, decay, the expiration date. I'm still new to options, so I'm trying to like, I could pick the spots, but when it comes to decay and all that stuff, I'm still brand new to that type. You know, I should have went equities. You know, I should have just went equities, and yeah, I know I could have, but we still hit it. I mean, we're still green on the trade. You know, we still ended up making all the money back +8, but I mean, we just held it for 2 more days. I mean, that's a bad beat for me. I mean, I missed it. You know, ended up taking a burn. I mean, I take burns all the time.
Yeah.
That one, you know, gets in my head a little bit because we should have just waited like 2 more days. It wasn't like that I lost all the money, but we should just waited. I covered way too early. You know, I was like, okay, I made my money back, you know, and then covered. And I had the right idea the whole freaking time. You know, it was going to 100. I knew it was going to 100. And, you know, just all I had to do was wait 2 more days on expiration date. And you know, me and my partner, we're still kicking ourselves in the ass for that.
Yeah. Andrew's got one, unless you have one, Jane.
Everyone's got one.
Yeah, I've got one too.
Good.
I've got one even on my website. That's the best one. When I was first starting to trade and I was really rocking it and I was doing really well, and then I had a friend come over and I was like, all right, I'm going to try to teach her how to trade too. And I was trading reversals at that time, and so it was a gap down, and I used to trade right around, you know, 10 o'clock or 10:30, the half-an-hour segments once the market starts to flip. And I got in, and then, yeah, I never recovered. And that was on Baby. And I lost 7,500 on that.
What was the ticker? Baby?
Baby, yeah.
Wow, I wonder
it
why
stuck
you-
in my,
I
stuck
wonder
in
why
my
you
head.
picked that one.
And then 2 weeks later, if I'd been patient, the same position would have been
Yeah.
a huge winner.
Do you
No,
fi-
not 2 million, not 2 million.
So you guys both hit on something, just to go on a quick little divergence. Do you find that the trades that you had that you didn't take out what you should have, do those hurt more than losses? I know they do me. Like the trades I was perfectly positioned for and I made $100 on it when I should have made
Exoditis.
10 grand. Those piss me off more than anything. Do you feel like?
Exoditis, yeah.
Yeah.
Trading's always shoulda, woulda, coulda though. It's always no matter what.
Yeah.
You just have to take it what it is and raise it. Just go on. Yeah.
That's it. That's why taking partials and then setting stops back as your entry can make it so that you are always in the green, as long as you're in the green.
Andrew had a story he wanted to say.
I wonder if anyone else. So at one point there was Sun Edison. Was it SUNE? It was amazing because it was on StockTwits for like when it was going bankrupt. It was like a week before it went bankrupt, and it was like I think it was like 25 cents, 30 cents, and there was rumors they weren't. You know, they were too big to fail. Like there's no way they can fail. And I was like, oh, there's just no way they're gonna fail. So I ended up putting like $30,000 into Sun Edison because I did all like, you know, I'm thinking I'm a genius because I'm reading, you know, all this stuff about them. Like they've got too much assets. There's no way they're gonna go bankrupt. And I did all the research. I thought I was a genius. And yeah, I was actually using like Robinhood at the time, and I was actually on the other side of the planet over in Mauritius flying back, and I checked my Robinhood. It said $0 because they had filed bankruptcy, so they went to OTC, and basically like when they go to OTC, they don't show how much it's worth. So I'm sitting there, I was like, oh my gosh. Now I think that was the funniest because everybody like everybody had like this kind of theory that there's no way they're gonna fail. You know, it's got to go back up. Like
Yeah.
it's at one point I think they were like, you know, a $30 or $40 stock. It was a huge energy Sun Edison solar panels, and they ended up going bankrupt. And it was just like the idea that, yeah, I don't know anything really when it comes down to it. Like I think that's one of the funny things when you end up like reading like financials and stuff on companies where you really don't have an idea, but you're like, oh well, you know, they're making money and they're doing this, so it's it's definitely humbling when you get that big kind of smack in the face where you just should never have been there. I think I ended up getting lucky because they kind of popped when it went to OTC, and I ended up only getting up for like an $8,000 loss. So.
Yeah, I did a similar boneheaded thing in 1998. I bought Pan Am Airlines stock for 5 cents, thinking this is a no-brainer. This airline's not going to go out of business. No way. Yeah. It went out of business. I lost all my money in that.
My worst trade was on Yelp last year in August, and the video is still on my YouTube channel, and it's one of the most viewed ones. The stock was open, gapped up, and I did a quick short on that. I usually don't do that, but I did that, and I got lucky, and I made a couple of $100. And that was the moment that I figured out, I figured out the market. I know how to do that. And then on the next pullback, I went short, and the stock popped up higher. And we have a rule in day trading, averaging down and averaging up. For those of you who don't know what it is you enter the trade goes against you, you add into your position, you bring your average up. If you, for example, if you're a short, if you're buying it, you average it down, so you make your average better. And they say don't do it in day trading because 85% of the time you can get out of it with break even for profit, but that 15%, it's really blowing up your account. So that was pretty much happened to me. The stock went up, I added more, and it went up. And that was the moment that I didn't want to accept that you have to come out with a $500 loss. This is the strongest stock. You do not short that. And I was in front of a community. Everyone was seeing me. So I really, the confidence, overconfidence, and the arrogance of, I'm the man, I'm a trader, I have to, and just keep going up. And I added 4,000 shares, eventually had to accept a $7,000 loss on that at the end of the day. And I'm glad I did. If I were accepting that a small loss, you go short, you shouldn't, but okay, that's your stop loss, get out with a loss. I could take another really good short at the end of the day on that, but I didn't have any buying power. I was stuck in a position. If I was freeing my buying power, I could take another trade and make that loss, small loss back. And that's a very important thing. Your buying power is very important for you. You have to use it very efficiently. So yeah, that's the thing I got that from it. And a lot of time, you see the chart, I say, shit, if I were holding it, I would have, made money. But this has to fit into your strategy because market can stay irrational longer than you stay liquid. That's very famous. So if you're a swing trader and if you see that Yelp the next day popped up, but eventually the third day dropped even below my entry. But I'm not a swing trader. I don't have the strategy for that. I was on margin. I can't hold that overnight. So I get a margin call at the end of the day. So I really shouldn't have that could have, should have, would have. It doesn't work in the day trading, at least in your strategy. So you have to stick to that.
And Andrew, the one thing you didn't say is when you take a $7,000 loss, when normally you're taking a $200 loss or $300 loss. When that happens, not only have you ruined your day, you've probably just ruined your month.
That's exactly the thing. A lot of them career. A lot of the traders that I see, that one bad loss, they take them out of the business. I see the equity curve of my traders. They send it to me. It's going up, going up, going up, doom, done. And then the 1 or 2 day bad drop. And one of the traders here was talking to me that he had 3 months. He's here. I don't remember. 3 months of good up, and then it lost all of it in 2 weeks or someone mentioned that. And that's very, very important to understand that those bad losses, we call them in community Hulk Day, when you go crazy and you shouldn't do this stuff, kick people out of the trading. I rarely see anyone, the equity come down like this. Usually it's going up and then that's the one that get out of it.
You know the easiest way to make $1 million trading it? We'll start with $2 million.
I have to make a note to myself, get a YouTube channel. Okay. All right. So, boy, picking one bad trade, that's tough. I got a lot of them. Probably the worst.
Tell us about shorting radio stocks in 1930.
You're so charming, John. So probably my worst trade was like 2 or 3 years after I started trading. So I'm a West Coast trader. I can count in 34 years, count on one hand the times I've been asleep when the market opens at 6:30. Ironically, once was 9/11. But I had a big position. At the time, I had like a $20,000 portfolio. I was like maybe 21, 22. It was a lot of money for me. And I had a big position in Oakley, the sunglasses. And I didn't have a stop in. And for some reason, maybe I'd gone out too late the night before or something. I thought I'll sleep in, past the bell. And some news came out when I was asleep, Sunglass Hut had decided that they were going out of business or something. I don't know. And they were gonna send all the Oakley glasses back, and Oakley dropped 50% basically. And the funny thing is, it had drifted down a little bit and would have hit my stop actually before the big gap. So, and then of course I tried to average down, and it took like 2 years to get back up to, and like I said, it was only 20 grand, but when you're 21, 22, it's devastating. So that's probably, that one still stings to this day.
Yeah. Well, I like to think I have a monopoly of good ideas, but I want to open the floor up to anyone out here in the audience that has any questions that you'd like to ask these traders.
The guy in the white.
Don Hensley, please grace us with your question.
So you guys talk to your subs quite a bit. Build a broker for me. If there were certain attributes that you would like to see, what would they be and why?
Do we get paid if you use the ideas?
You get nothing.
Okay.
Like research, man. This
Yeah.
is not like
Okay, so
people who have real questions.
So for the live stream audience out back or watching online, I just want to repeat the question. Don's asking, as active traders and for the people you engage with, if you were to build a brokerage from scratch, right? What features would you guys want to see? What's important to you?
Well, I don't have a subscription service, so I don't know if that exempts me or not. And I don't know, I mean, what brokerage doesn't have what you need right now? I mean, really, I think anything that you would add for a broker would be something that would just be kind of fun. What they're doing with the trade app's kind of cool. I actually did start a brokerage from the ground up at one point. It failed, but I started one up. And what we did was we gave the ability for someone to take part in the exact same trade as anybody else did, not cloning a trade, not mirroring a trade, not going in afterwards. We actually were able to connect them to the same block of what we called a lead trader, so that everybody could participate in it. The people that were part of that trade could either take the trade to its conclusion with the lead trader, or they could sever their part of the trade and trade it themselves, or they could close it out. It was a little bit too ahead of its time. The technology just wasn't there yet. And even though it was a cool idea, it just didn't scale. So, but I mean, really, like, there's nothing for me that I can't find, or a tool or a community that's not already out there.
What are like the 2 or 3 things that you focus on that you have to have when you're trading?
User UX and UI. That's it. I mean, I've used interactive brokers for God knows how long. I do 95% of my trades on my phone while I'm sitting in front of my charts. I call it my remote control for the internet, right? It's so much easier. And that UX and UI, being able to just go through it, intuitively and easily, and not having any glitches, that's all I want is a broker that doesn't go down.
I just saw Michael Noss's antenna go up, and you said trading from your phone. That's all he wants for trade ideas. That's coming down the road. Okay, as you tell me your tools, please, if any one of you guys say you want a level 2 screen, I'm going to get you off the stage because I'm tired of hearing about level 2. Don't get me started on that. Okay, go on.
You don't like level 2?
It's useless in 2019. Anyway.
Well, the brokers have to adapt to the market. Right now what we are seeing is, when I started trading, per ticket I was paying $10, and that was the reason that the PDT came in, to protect the small traders, that $25,000 minimum account that you had to, because the fee was really high, and the small people were getting really crushed in the market. So what we really see now with this free commission and getting better short inventory and the more liquidity and more routes, I think the future of day trading is really, really bright, and that's the lesson that we got from cryptocurrency, crypto market. That if you open the barriers, if you remove the barriers, everyone wants to get into the financial market. It's very difficult to open an account, to do the verification, and a lot of it is the regulation and the government and FINRA and stuff. So you can't really change it, but the brokers can remove the PDT, can lobby and really discuss that $25,000 is really not necessary anymore, because the fees are extremely low and it's accessible to everyone.
Is that a good thing?
You can't fight that. Crypto markets prove that. I had a lot of friends that I never asked them to trade, because first of all, I didn't think they're capable. Second of all, I didn't think they have money, but they spent $50,000, $60,000 in the crypto market and they lost it. So I think if you don't do that, if you don't bring their commissions low, if you don't make it easier, people take their money to crypto market. They create different markets for them.
Look, I just think, the idea of bringing down the friction between getting someone out of the market into the market sounds great in theory, but the fact of the matter is most people that trade money for themselves lose money. That's just the way it is. Most self-directed investors lose money in the end. So I'm not so sure. I mean, from a business standpoint, it's great. Sure, the more people that you come in, but I'd really like to see a study done in like 5 or 10 years, all those people that came into Robinhood or all these, low commission apps, if they're still around, what happened to their accounts? And everybody thinks that education is the answer to that, but people have been trying to educate people about the markets for years. So, I'm just playing devil's advocate. I mean, I like it as a consumer. I like these apps and I like these brokers, but if you want to enlarge it and make it a macro question, I'm not so sure it's good for, the average investor.
Well, I see Jamie Hodge hanging way over there by the window, and I know that if I were to bring Jamie Hodge on stage and talk about pattern day trade rule, we'll be here till tomorrow, so we won't do that. So we're not pretending the pattern day trade rule protects anybody, are we? Can we get rid of that facade?
Only thing pattern day trade rule is created for is for basically to keep the brokers solvent after the big after the .com bubble.
Right.
I mean, that's really what it comes down to. They didn't want everybody, loading up on positions, and then at the end of the day, everyone getting wiped out and nobody having money in their account. So they were like, hey, everyone's got to keep $25,000 on their account.
Wait,
it wasn't.
So you're saying politicians were protecting their friends and not retail
No,
traders?
it wasn't about protecting. It was about
that?
keeping the bank solvent, or the brokers solvent, during the time.
All right.
And nowadays, it's not even so much about the fees. It's really, at the time, they didn't have the, restriction. They didn't have the technology to really kind of manage the margin and to know someone had a $100,000 position, that shouldn't have had it. They didn't really manage that risk. So nowadays, the brokers have so many tools to manage risk. They can cut people off. I've been cut off plenty of times where I'm like, what just happened? They cut you off. They know, hey, that position, they got some stuff going on, we're cutting you off. And they cut you off, they call, back the shares or whatever it is. And there's ways to manage that now. Where PDT, the problem is when you first start trading, if you're stuck to this idea where you can only trade 3 times in 5 days, a lot of people end up holding overnight because they're like, I can't sell because if I sell, I'm gonna get pattern day trade rule.
Right.
So they hold overnight, they end up losing money the next day, and it just hurts the overall process. I can go to Vegas tomorrow and put every single penny that I own on black, but I can't put money in the stock market and manage it the way I want to manage it.
Crazy.
There's no real reason.
Yeah.
Exactly. So that's what it comes down to. At the end of the day, I'm saying 2 years PDT is gone. Once the big brokers now, they got to replace the money. They're losing. TD Ameritrade's losing $1 billion a year from commissions, by cutting off commissions. So they're gonna lobby. They're gonna get it done. They'll get it. They need more volume. They need more order flow. At the end of the day, we all know what the big banks want. They want more order flow. The big funds, the AI, everybody wants more order flow. More volume in the market just makes it easier for the AI to learn, for the algorithms to learn. So that's what they need. They need more retail traders to basically buy the paper on. Like Donald said earlier, smart money buys dumb paper, and that's what they want.
Well, hey, let's give a quick shout out to the Small Exchange, who was one of our big sponsors today, launching those new products that they're talking about that are going to not be subject to pattern day trade rule. So they're looking at the landscape and saying, okay, let's figure out how to give customers what they want. They're going around the government to do that. I think that's wonderful. I don't know if you guys have any thoughts on those products. If they interest you, I hope they do. I think it's going to be exciting, right? I saw a hand raised over there, right there.
Question for Jane. You mentioned earlier that you like to track the footprints of the dark pools. How do you do that?
Yeah, for sure. Well,
Jane, can you repeat the question so that?
yeah, for sure. The question was, how do I track the dark prints from the dark pool? So in Charles Schwab, we are able to see the prints coming through. And the dark pool was set up back in the 1980s for the large institutions to go ahead and be able to trade with better commissions and better fills. And they don't have to report that for 3 hours after the trade. If they route it through London, 24 hours. So if we start to see late sell prints on the SPY, that's a pretty good indication it's going to be going down. They've taken a large position. Vice versa, December 26th last year, large buy prints. We knew that the bullish move was coming. So being able to see that before the drone happened with the oil, all these oil stocks were getting all these prints coming in a couple days before. We knew a major move was going to come. We didn't know the direction. But like I said, the news will always come after to justify it. All CNBC, Fox Business News, they always have to justify the move, right? So being able to see that and track that is huge in my eyes because you're able to know, okay, there's a large position going in on this. We know that something's going to happen. We know that Apple had big prints. Okay, we're above those prints, bullish. Below the prints, bearish. It makes it a little bit less emotional, because you're able to say, hey, these big guys that have billions of dollars, we're the little penny retail traders, right? We have peanuts compared to them. Why not go ahead and follow their coattails and follow their moves?
Yeah, right on.
You can actually see these large prints.
Yeah, they print throughout the day.
Who else had some questions? I saw some other hands up. Back there, Paul.
I want to go back to brokers and the new small exchange. Do you think actually you're in the USA, I'm British, I go to trade CFDs and spread bet. Do you think that you actually need some better products rather than options, which are extremely complicated for 99% of traders? Do you actually think we should get simpler products to trade in the US, like CFDs or spread betting?
So the question was, do we need more simpler products in the US to trade?
I think people don't like change.
I mean, at the end of the day, let's ask ourselves, who are we betting against for the CFDs? The broker, correct? So we've already seen it. I mean, there's been a big push for CFDs, offshore. A lot of people, since they can't trade because of PDT, they go offshore. They use offshore brokers. Maybe they go somewhere with spread betting. Maybe they're doing CFDs. The problem is, at the end of the day, if you're making money, the broker's losing money. So it's in the broker's best interest to make sure that your platform freezes. You have some crazy spread where you're not allowed to cover on the bid or the ask, but you look at your other broker and you're like, wow, that price hit that, but I couldn't cover on this broker. They play games. It's like, I would love to run a CFD business because it's the ultimate way to make money, because 95% of traders lose money, and I can just basically rig the game so I make sure that 100% lose. So, CFDs are a terrible product, and I can't believe they're even offered anywhere at this point. So that's the way I look at it. I think there's probably a better way to do options. I think options are very confusing right now, especially I've been learning more about options, but trying to figure out a better way to kind of offer like almost like a micro option, kind of like a dumbed down version where you kind of just, I wouldn't say, it's not like really like a spread betting, but more so like, hey, if you think Apple is going to go to $200 in the next 3 months, you can buy this option. It's very clear, very easy to understand. And you kind of get rid of a lot of the Greeks and the alpha and all that, because that's what's so confusing. I think people just look at it and are like, I have no idea what to do here.
So Patrick's looking for a financial backer for his CFD firm, so catch him at happy hour.
Guarantee profits, no problem.
So the problem with CFD is it removes the liquidity from the market. The currency exchange, the Forex market, it's pretty much CFD because you trade against your broker. But those are regulated. So the regulation can fix the CFD problem. But the main issue is so broker can't screw you over the CFD if it's highly regulated. But the problem is it removes the liquidity from the market, and that's why they don't want it there. Because we need these orders to come so you have the stable and growing market because of this liquidity that comes into the market. As a trader, I'm happy to learn anything, but something that I learn about myself is do not jump around too much about the product that I'm trading. A stock market equity, which all of us are, is not the most capital efficient, because it's expensive and the leverage and everything is low, but it's something that I have figured it out and I try to trade that one.
Folks, we have 1 minute here, so if there's any urgent question, if anyone else has an urgent question, we'll address it. Otherwise, everyone here is hanging out for happy hour, which I believe is starting in the back room, back over there, right?
That's urgent, Tom. That's urgent.
That's
Happy
urgent?
hour, yeah.
Okay, all right. So I guess we'll wrap up. Everybody, thanks for hanging out, and let's keep the party going.